Ladies, gentlemen, to a Friday evening live stream here where we're going to be discussing my portfolio, what is going on in the markets here, and just try and get some general feel out for how you guys are taking into the market. I'm trying to get some chill vibes on, but the music's a little bit loud back here. So if you guys have any questions, feel free to dive in at any single point. This is something I think I'm going to start doing weekly, at least until the markets recover here, because the responses and comments that I've been getting in my lackluster amount of videos I've been posting recently have been relatively negative, man. I don't think I've seen so much negativity in the market as I have over the last week here. So what we're going to do, folks, as mentioned, I'm going to talk a little bit about some of the stuff I'm dealing with in my personal life financially, which is more or less detrimental, that has been hindering my ability on my financial independence to perhaps one day retire early, because this market has been rough. More or less for my family, real estate dealings, hiring lawyers. Lawyers are expensive, folks. But yeah, mainly just picking up. I got to continue to keep buying some of these index funds because things are getting very cheap. And just to throw it right in here, I figure we'll start off with my tax advantaged accounts, because when I logged in here, and I haven't been looking at this nearly as religiously as I used to. I've been trying to save up a little bit of money so I can top these up at the end of the year. But take a look at this. The Vanguard S&P 500 index that I own literally like a week ago was in the green. If I sold it all, I'd have saved myself about $4,200 in paper losses as it stands today here. So, the markets, guys, have just been on a treacherous, and I don't know how treacherous it is because we're kind of just going back to where we were, but we'll take a look at the sticks in here in a bit, and we'll take a look at where the market's finished going into this weekend. But I wouldn't mind just trying to guide you guys out, talk a little bit about, again, the financial independence to retire early. The whole point of this channel is I started documenting this back in 2019, as I've been 100% transparent with my ins and outs of all of these different stocks and companies. Hi, Ari, appreciate you coming on. FedEx is a nice buy. It's nice to see some of you guys are getting into the individuals with FedEx there. I don't play too much of the shipping companies themselves. But let's pull up the S&P 500 here real quick, because I just think it's relatively intriguing. The sentiment that I'm seeing versus the sentiment that I'm reading from you guys in that comments section. So first and foremost, guys, and then we'll talk about a little bit to do with some of the stocks this week, some of the more relevant news, whether we're talking Adobe, the Ethereum merge, what's going on with crypto. You sold. I think I saw one of your comments there, man. I haven't. Well, if you haven't been around in a little bit, I've sold most of my individual holdings. Actually, I was really on the finer line of actually getting rid of some of my REITs and just really refining it down into just a few ETFs. And that, again, isn't something that says anything about how I feel about my individual stocks. Everyone's kind of dealing with this in a different manner. I don't think if my life was as volatile as it is right now, I wouldn't have been so inclined to switch my portfolio over to individual stock, or switch my portfolio or leave them in individual stocks instead of buying the ETFs, right? Because I think that was one of the hardest decisions. At the beginning of this year, when you watch my videos, they were very I don't know the right word is, kind of all over the place, because I was in and out of a lot of stocks. I just couldn't manage the amount that was going on. My personal life was getting inflicted from a bunch of different angles, and I just didn't want to be as involved as I was, which doesn't do as well for this channel, obviously, because I notice a lot of people, whether like Joseph Carlson, there's a lot of guys I love out there like PPC Ian, and those guys are still really heavy into some of those individual stocks, which to some degree I don't fully understand. Because with PPC Ian, the guy's got like 40 stocks. And the fact of the matter to me is if you're going to hold individual stocks, you have to manage them. Gen X Dividend Investor is another incredible channel out there. And I've noticed that he mentions this a lot, as well as he started buying ETFs like SCHD, because inevitably, his wife's going to have to take over his portfolio, and he's trying to streamline it in a way where it's manageable, because people keep forgetting that, individual stocks are not exactly passive investments. And it's really hard from a psychological standpoint, trying to decipher, what the true margin of safety on a stock is, because there's so many variables when it comes to evaluating stocks beyond just numbers, right? I could throw you 10 value stocks that, everything money talks about, whether it's like Alibaba or Intel or Facebook, and trying to sit here and actually put a true market value on it is very hard, because I could say all of those stocks are cheap, yet, they keep going down, right? So the question is can they rebound? And if they are going to rebound, then where's the actual, value in lay, because it's weird how value investors tend to pick different companies. I notice a lot of big hedge funds are buying things like Netflix. I've been really intrigued by what big institutions have been buying, things like PayPal. I notice that's a fan favorite amongst many of the YouTube investors out there. I thought you said we've reached the bottom. This is what's funny, actually. Let me bring this up because I've just started noticing this today as well. So the reason that I think we're nearing a bottom, if we're not starting to find it already, is first and foremost, when you look at a ton of different stocks. I mean, find me most of the small caps outside of a few exceptions, like a lot of the popular small caps, whether it's like Palantir. A lot of them are starting to find this same kind of leveling that we're seeing in the S&P 500. Like, even though this feels really negative, we're kind of getting back to testing those lows, but I'm seeing a lot of this. Like the S&P 500 is forming a bottom. Technical analysis. Now, I hate technical analysis. I think it's kind of mostly just this Fugazi is trying to value stocks. There's a lot of different metrics you could take into consideration. And I don't know any day traders. In fact, the craziest thing about day trading, I won't shout out the channels, but there's guys that I've been watching, like OG guys, and they've had to go back and get real jobs, which kind of blew my mind because their whole channel was touting how you can make a full-time income trading stocks at home. You don't need to get a real job. This is what you can do. And yet they themselves have actually gone back and gotten real jobs. And I notice they don't post to YouTube like they used to. And like I said, man, there's only one difference between me and a lot of these people on YouTube. I'm not the best, I'm not the greatest, but I'm sure as hell still going to be here when they're all gone. Just buy and sit. Yeah, that's going to be most of my attitude right now. I might go index fund too. This is the conversation, right? Individual stocks are stressful. See, this is going to be one of like the most counterintuitive things, because like what made my portfolio so insanely successful over the last several years is we haven't seen the kind of market conditions we're going through right now. But in the early days of me investing I got used to my stocks dropping 50%. I mean, my entire portfolio was down 40% at the beginning. And that's because I was buying small cap, highly volatile companies that would do 50+% mood swings. And you just kind of have to stomach that if you're looking for those outsized returns. Because again, as fast as this market isn't exactly dropping, I would say at a real fast rate. But you have to understand, like when these stocks start to turn around, that cost averaging at these current prices, it's hard when you bought it at the top, like Facebook, way up over the, what was it, in the 300s there to where it is today, like in half. I mean, it's hard to wrap your head around that, buying that dip when you think it's so like, because your intuitiveness always tells you to sell. Like, this is it. It's never coming back. But I promise you, so long as the company is sustainable, inevitably throughout its history, it's just hard to get past the moment you're sitting in. That's the real problem, right? Because you kind of got to look 3 to 5 years out and know that we're not going to be in the same market condition even 6 months from now when it comes to the interest raising environment that we're in. In fact, I think we're going to head into a market that's going to be a lot more confusing, and something that I've never personally witnessed when it comes to deflation. I think we're going to get hit with deflation. We're not going to get Paul Volckered. I don't think that's going to happen, which is basically just the Fed raising rates well above the inflation rate, because the inflation rate's at 8%. I don't think they're going to do that. But what I think is going to happen is we're going to start to see the inflection point where we're just starting to get over the hump of inflation now. But when it starts dropping, it's going to be like pushing a rock down a hill. As soon as it starts rolling off, it's going to roll off so fast that inevitably the Fed might get more scared in the other direction, where we head into a deflationary environment, which is not good. The whole thing is balance, right? The Fed just wants balance in the system, which is something we do not have right now. So everyone's kind of freaking out, and they think the Fed's just going to jack rates up, which arguably I don't think makes much of a difference outside of the US dollar and the FX rates on Forex. Forex, I think, again, it's so weird to me that they raise interest rates and the market just sells off for whatever reason. I mean, the way the market corresponds to news is so dramatic, and I'm not sure who's sitting on the sell trigger and thinks selling down here is a good decision. Yeah, we had a bear market rally. We're coming back down to those new recent lows, but I just can't see us going much farther down than we've experienced with the broader indexes. Again, we can go down lower. No one actually knows what's going to happen, but I'm telling you, man, when inflation rolls over and as quickly as the market responds to interest rates going up, they're going to respond just as oppositely when the market starts getting good news again. And the market will, again, the valuation metrics won't make sense. Stocks will just keep going up week over week, and people will be sitting here wondering why, with all that negativity that's been driven down their throat. That's where you get jaded, right? That's where people get out of the market and you never see them come back around. Because you get so used to this negativity, and you lose all this money. And instead of sticking with it and just understanding that this is a learning lesson, For most people, I hope this comes back to the point that it depends on how much money you started this game with. Because if you only started in the last 2 years and you only invested 10 or 20 grand, it's really not that big of a deal. It's a little bit of a different deal when you're playing at these higher levels that we're watching YouTubers play at when you're managing, 50, 100, a couple $100,000 or $1 million. Because I wish Graham Stephan was more involved with showing his portfolio, because I think I'd be really intrigued just to see, the fluctuations and the amount of gain losses he's experienced, especially having, I think he's got a relatively large crypto exposure as well. I want to buy ETFs, but I stay away from individual stocks. Yeah, if you buy 10 or 20 individual stocks, you're pretty much owning somewhat of a diversified ETF. It's just a matter of you're going to sit there and manage it over the next 3 to 5 years and understand that, finding that comfortability with the companies you hold. Because when the company drops, if you're comfortable with it, it shouldn't really bother you that much. You see Warren Buffett buying Apple, Occidental Petroleum, and things like that. So, I find it intriguing. Buffett's kind of just doubling down on the same stuff he's been buying. Whereas you see people like Michael Burry just completely dipping out of the market and saying, goodbye, I'm done with this. It's like really two opposite ends of the investing spectrum, right? And you're fighting both of those constantly. Like the idea of just cost averaging value investing, and these people that are saying, no, you're going to lose a ton of money. You're better off holding cash, which has been a very good investment up to thus far. But the question is now, when you take that cash and what do you buy with it? Because bonds seem intriguing, but when the market starts coming back around, you're not going to be so happy that you bought bonds and you're only making 4 to 6%. Canada GICs maybe pay you 4.5%. I've lost so much money trying to trade crypto and stocks. Yeah, but again, you kind of, like I said, I'm curious how much money you're managing and what you're playing around with. Crypto, I'm glad I mitigated a bit to save myself some of the pain right now, but the crypto stuff is agonizing. I want to kind of keep this a little bit more coherent, guys. You're kind of keeping me all over the place. So let me just pull up some of the market stuff here and just see what's going on this close. But ideally, what I would like to do, guys, is start coming back every single Friday. I am going to be taking a bit of a vacation here next week and just get out because I need to. I'm getting over COVID, which has not been fun. When I thought about what COVID was going to be like, I didn't think it was going to hit me as hard as it did because I was incapacitated for 3 solid days. And I'm like, oh, wow, man, I understand why people are going to the hospital over this. It was rough. But yeah, so I'm curious. I don't want to throw you on the spot, but I'd be intrigued to know what you're buying now and just kind of how you're feeling out your current risk tolerance, right? Because I think a lot of people, that's what they're adjusting to right now, is how much volatility in their portfolio can they handle? Because, a lot of us buy individual stocks and said, hey, I'm ready to ride this to zero. But when it actually drops 50%, your opinion changes pretty dramatically, seeing those paper losses, right? Stocks are fine, load up the economy, fine, Apple. See, I don't think the economy is fine, but I think we are 10 times better than we were, in 2019. That's the double-edged sword that we're living in right now. And I think Adobe was one of the best examples of that this week. Adobe has been like the defining factor of every stock earnings because companies still want to grow. Look at Google right now, trading at like 103.9. All of these companies are really investing dollars because they know that there's so much future capabilities and just continuing to build out their brands, especially with Adobe. That purchase they made was very intriguing because they had to do share dilution to pull it off. And the market just took it so negatively. But the company they bought, I think, was recorded to do $400 million in revenues. They're paying $20 billion for it, but it's doubling revenues like every year, especially in this market. So I don't know why that the market is taking that so negatively. In 3 to 5 years, they buy a company like that can be doing $1 billion or add $1 billion to free cash flow, in a year or two. If it gets to that point, you have to understand, man, like Adobe is like their growth metrics and switching to cloud. Like, I don't understand how the stock is down as much as it is. It is overvalued, but again, the market is generally overvalued. And I think the markets are going to sustain an overvalued metric from a PE standpoint, probably for the foreseeable future. And like I said, we're living in a moment right now where things are slowing down and people are taking that so negatively. But when we're talking about things slowing down, we're not talking about things going negative for most companies, most large caps, Apple, Google, Microsoft. They're all still posting revenue growth in a period where we're seeing a retraction in the market, right? So that's insane to me because when you look at the growth we had through March, through the 2020 pandemic, this is why I'm saying when you look at GDP and you go back in history, it doesn't make sense that the market's responding so negatively if we bounce from where we are, the bounce is going to be heavy. I think if the market comes back around at some point, we start seeing consumer spending back up, people start getting a little bit more comfortable with the market we're in. like I feel like this again is a buying opportunity. That's the hard thing. I notice everything money pushes that narrative a lot, that they think stocks are going to drop another 50%. Based off whatever historical facts they have, which again is all hearsay. No one knows. The market could go lower, could go higher. I'm not trying to pretend that I know what's going on. I'm just feeling out the fact that when I look at things, I can't really gauge why the negativity is as harsh as it is without some other black swan event kind of terrorizing the economy. So I think we're going to go through this wonky period for a little bit longer, maybe 3 to 6 months. And as soon as we start seeing inflation roll over, the Fed's going to roll over with it. And then I think so long as nothing crazy comes into play, with a black swan like nuclear fallout event because of geopolitical stuff, I think we're going to be just fine in the Western world. China, those guys could be a bit of a different story that could also throw a wrench into this in this economic circumstance. But things are strong. The consumer's strong. I don't think things are that bad unless you bought a variable rate mortgage in the last 6 months. Should we buy bank stocks? Yes. Banks. I'm buying bank stocks galore right now. I know I'm not buying them on an individual basis, but I am buying them through VDY, which weights like the ETF almost weights 60% banks. I mean, Royal Bank is 13% of that stock, which means, I've got like 130,000 in there. So like 15 to 20,000 of it is just Royal Bank. The reason that banks are one hell of a buying opportunity right now is because if you listen to the earnings calls, and I mentioned this a few times, like Scotiabank, I listened to the earnings calls and they all stated pretty much going into this interest raising environment that we're going to get hindered in the beginning. But the following years, because the interest rates are going to be higher, obviously the bank's going to make more money. Inevitably, as the economy levels off and spending comes back to a more normal rate, that's only going to bode better for the banks. And the banks are posting good numbers. I haven't seen anything super negative come out of the banks. And the yields are super high. It's crazy how high. I mean, you go back a year ago and I was wishing the banks could go back to paying out 4 to 6%, which is insane. I mean, especially the Canadian banks, world renowned, TD, Royal Bank, BMO is great. Bank of Nova Scotia. I mean, you buy a basket of those things, you could retire on them alone. I think if there's any investment for a retirement portfolio that is solidified and as strong as it's going to get from a dividend income standpoint, it's the banks. I don't think you can go wrong with the banks. What sectors do you think will outperform next year? I think, so at the end of the day, the same sectors are the same. So we're going through this dramatic shift, right? Maybe I'll zoom out because we're not really looking at the sticks here. We're going through this dramatic shift in a lot of different aspects of the different sectors. I mean, energy is the only thing that's going to remain somewhat consistent, but I'm looking at utilities right now are fascinating to me because I think they're overvalued, but they're going to go through this shift. Banks are going to go through a technological shift. Healthcare is going to go through a technological shift. I think healthcare is going to still be one of the most prudent, probably next to lithium, graphite. I think those sectors are relatively underwhelmed after the hype that they've had. I mean, what's Lithium America Corp trading at right now? I think the ticker really see for that one. These things, you can't value them because they don't make money right now. Yeah, the Lithium America Corp is actually doing really good this year. It's relatively flat, down 7%. Not that I'm buying that, but the reason you got to be looking at lithium if you're looking for growth, it's so hard. I mean, lithium is one of the few commodities that is not going to crash. Actually, let's just take a look at it because I don't think people actually know. Lithium graphite, lithium and graphite. I mean, these things trade at really insane levels. I mean, take a look at this. This is why car companies are still going to see some kind of issues into the future, right? Because I mean, you look at the lithium chart here, guys, and this is not going to change. The lithium shortage we're going to run into is going to be, I think, insanely profound because of the energy storage that's going to be required, not only from cars, but from what Elon Musk says with obviously upgrading the grid can't handle the current system. And the only way the grid's going to be able to handle. Okay. So this is the funniest thing, man. Like you never hear anybody that owns a Tesla talk about the power issues they have. Someone in our family bought a Tesla and they cannot flush their toilet when their Tesla's in and charging. It'll flick their breaker, which is crazy to me, right? So how do you fix that problem? I mean, if everyone in your neighborhood plugs in a Tesla, it's like the equivalent of turning on 5 air conditionings per household. It's nuts. And it could easily crash the grid. And this is such a big problem. And one of the resolutions to it is obviously either supplying a lot more power to the grid or finding a way to store power, whether it's battery walls or doing what Elon Musk and Tesla are doing and starting in Texas, building those huge battery facilities for storage to help kind of manage the peaker plant problem. But all of that's going to come back down to like the insane demand for lithium. And with the demand we already have, and you look at the insane chart, I mean, lithium, the chart looks like a penny stock. I mean, most commodities look like penny stocks, but Like I said, I'm not playing lithium, but I can see the insane 5 to 10 year value that any company that has real access to it and controllable cost access to it, where they're not dealing with buying it from a third party supplier that's ripping them off. I mean, you're going to print. It's going to be the biggest gold mine. It'll be the new gold rush. Will be lithium, graphite, and battery metal materials, nickel. And there's just a lot of mines like Lithium America Corp are working on it, but they're not cash flowing and they're not looking at actually getting that stuff out of the ground and permitted for like another few years at least. So, I mean, if you're looking to make big money in the market, lithium is definitely a place to go. Outside of those sectors, healthcare is too risky. I do like the healthcare sector a lot. I'm seeing a lot of advancements still, but it's too hard to play it because it's too much like gambling. It's really required on things going well. From a lot of different aspects. So, I mean, look at the S&P 500 right now. I think we're starting to see more healthcare companies make their way at the top, like VOO. I mean, let me just take a quick look because I've noticed that we're seeing these, what's the healthcare company called? You guys know, it's in the S&P top 10. Most people don't even know how often right now the top 10 companies are switching out. Yeah. United Health Group is now in the top. It's what the 7th or 8th largest company on the S&P 500. Johnson & Johnson is. This is crazy to me. I mean, look at this. I got to show you guys this. I can never get over this. So when a lot of people look at the S&P 500 holdings, they're always looking at the Yahoo Finance version of it, and it never updates. If I go on Yahoo right now, you will not see the same top 10 holdings on VOO. And I don't think people understand how often these are swapping out right now. I mean, Facebook was in the top 5 or 6, like not even half a year ago. And you take a look at the top 10 now, and, United Health Group, Johnson & Johnson, and ExxonMobil have replaced Facebook, NVIDIA, these incredible companies, right? So, I mean, I think healthcare is going to continue to start dominating some of the top 10. I'm surprised it's not dominating it more, but to see J&J and United Health Group in there is pretty nice. So I'd keep that in mind, depending on, your exposure. I like Pfizer and all those companies still. I think they're great, especially if you're looking for dividend income. But I've been really analyzing a lot of ETFs lately because of how often things have been moving around. And this comes into that management aspect of things, right? Like if you're not going to sit there and manage your individual holdings, at least these market cap weighted math. I don't know how their mechanisms work, but it's all market cap weighted, right? So it's a catch-22. It sucks because Facebook's going to have to work its way back into getting the money these companies get. Because once you get in here, man, United Health Group is now here. So long as the stock sustains, every new dollar that hits VOO, 1.44% of it's going straight into United Health, which is going to continue to push that higher. So as an electrician, we do have power to have everyone with EV cars. Won't happen even till 20. Yeah, this is the thing that blows my mind, man. It's great to hear an electrician's perspective on this. Maybe I'd love to get somebody that's more like really knowledgeable. I mean, I work with a couple utility companies, and what they're doing right now is they're look up Tantalus System Holdings. Tantalus Systems is this small cap company. You've never heard of it before. And the contracts they are getting with regulated utilities is insane. The company's cash flows are growing beautifully. Their stock is just getting shittered with the rest of the market, and there's nothing they can do about it. But the company itself is in an incredible position because they're helping utilities gather data and understand better how they're going to try and handle this EV switch. Because it's going to just devastate the grid. So, I mean, if you can find companies related to that, I really like Tantalus. I actually know the CEO really, really well. Interesting guy because he sees a lot of these dilemmas that most people haven't mentioned. Again, I don't know how we switch to electric vehicles. I don't know how we're going to do it. I don't see this transition being smooth at all, let alone how we pull it off successfully in a short period of time. Because, the government's like, oh, we'll ban cars and no new ICE vehicles sold in California by 2030 or 2035. It's like, okay, that's great. But who's going to power the car when you can't charge it because the whole grid keeps peakering and falling apart? Crazy stuff, man. Crazy stuff. I love it. But outside of that, what else is going on with you guys in your portfolios? Because personally, I want to know how you're managing your financial independence. I can presume that's why most of you have been, at least sticking around with my own journey. Because I got to say, man, like my parents are dealing with one hell of a mess. The real estate market correction absolutely devastated my parents. I don't want to get too much into the finicky details. My parents hate when I talk about it. I love to do a video with them and sit them down and just talk about the bad side of the market. Because again, you look at crypto, you look at real estate, And again, it's the people that have been heavily involved in the last 6 months, especially people that have been leveraged, are just getting absolutely wrecked. And I don't think we hear those stories as much as it's happening to a certain percentage of people. So, I mean, yeah, between that and getting COVID, I've not been having a good few weeks, which is why I've not been posting as much content. I think I've posted the least amount of content the last month than I probably posted over the last few years, which sucks because I try and be transparent, but I'm starting to get a lot of brick walls in front of my face. So, I mean, it's like, I want to talk about my corporate account. I want to get into that a lot more, but my accountant is like, I didn't realize the complexities of managing a corporation. It makes me want to become a CPA, a chartered professional accountant, because the guy basically owns my life right now. It's challenging because I just can't keep diving into it and saying, oh, I'm doing this and I'm doing that. And I'm going to buy these assets in my corporation while I'm like sitting down with the accountant. I haven't paid any taxes in the last year. And between the corporate tax rate is amazing. I'm going to pay little taxes on this 6 figures I've made over the last year, but that's not like the variable issues that come into play because there's just too much that I don't know. And I'm having to like sell stocks, stack cash, and just manage it in a way where I'm not going to throw myself into a brick wall and end up owing the government a lot of money or just flipping up on something. I just want to be more certain of what I'm doing before I start talking about it. I'm a variable rate. Oh, so you're stuck in this position. I'm on a variable mortgage and my payment went to $850 a month this year alone. Yeah. Are you able to sustain that, Jay? Video a little while ago of this poor girl, man. She went to buy a house and she must have bought, it was probably a $900,000 million property. And she probably just came up with the down payment. She said, 10% on the, how does it work? I think it's 10%. Or how much the government makes it they used to make it way too cheap up till this market correction to buy a house, because you only had to come up with like 5% or something on the first $500,000 and then 10% anything thereafter for the deposit or the down payment. And like she got royally screwed because basically she was doing it in the middle of the market crash, and then the bank asked for more money and she couldn't come up with a 20% down payment because the bank started freaking out and they're like, oh, you should have closed on it earlier. We can't do anything because the mortgage rates are going up and you didn't lock in a mortgage. And even though you signed to close on this piece of real estate, you put a deposit, you're probably going to lose the deposit and you're going to get screwed. And I'm curious to how that worked out for her, because I think she's in a worse situation than my parents because she was trying to buy her first home and she lost her deposit and she's going to get sued. Because what people don't realize and what's horrifying about this real estate market is that if you do not close on a contract that you've signed and that house lost 20% of its value and that seller sells that house for a 20% loss, they're going to sue you for everything that they lost that you were supposed to pay them. And, oh man, I really wish I could talk more in depthly about this. It's so crazy because the crazy thing is that puts you in a different situation where if you have assets, now you need to protect your assets from getting sued. And that comes with a whole onslaught of just dynamics that I've never really quite understood about, trying to deter people from suing you. I've been talking to a variable amount of people and lawyers, and obviously it's kind of frowned upon, but this is where people start throwing their assets into other people's names. So you want to sue me for $300,000 or $400,000? Go ahead. I don't own anything, and you're going to make me pay a monthly payment, but I'm going to inch it out so you never see that money and just deter you in every way imaginable from suing me. It's very stressful stuff, man. So if you get caught on the wrong side of this real estate market, like you could literally lose everything a lot quicker than you think. So when you're signing those contracts, man, if I can tell you anything, lock in the mortgage rate right away. Don't wait to lock in mortgages. Don't leave real estate deals out for 3 to 6 months. If somebody wants to close on a deal, man, show me the money, lock the interest rate in, get the mortgage. Don't sign anything until you can see that money on paper. Because a lot of people you can buy a house without having an approved mortgage. I didn't know that either. Turns out people cannot have the money and still manage to convince people that they can pay for things and sign a contract. It's so stressful, man. So I'm glad that you can pay the payments. And I think hopefully we start seeing inflation cool off, because that'll stop the variable rates from skyrocketing as much as they are right now. I think we'll level off somewhere in probably, I could see 1 or 2 more interest rate hikes, probably not as big as we've seen them. But again, as soon as inflation rolls down that hill, it's going to roll fast. And the Fed, the Canadian Treasury, will immediately become accommodative again, because they don't want to see negative inflation, because that could be just as scary as inflation. It's so crazy that we can get screwed on both sides. As prices fall, if they start falling too dramatically. I mean, you look at something like Rolex or these companies, these luxury brands, right? Like they were loving the demand, but now the demand has dried up and we're seeing Rolexes fall off, NFTs, anything luxury based is just getting crushed right now. And that comes into the negative inflation, but that's just luxury items. If you start getting that into the regular like market of things, I mean, that's when companies' margins start to get stretched, things get really tricky, and then the government's like, oh shit, we can't have that. So we need to put more money into the system so people spend money again. Because you got to remember, the Fed's just trying to squeeze you. They just want to tighten you up. They just want to scare you enough that you stop spending so frivolously. And that way, you know, people stop buying and competing for NVIDIA chips to mine Bitcoin and all this stuff. So that way the market can level out. But if it doesn't level out in a nice cussionary way, and it just immediately flips to the opposite side where no one can sell product anymore, and they're forced to just continue to lower prices and margins get crunched and earnings get hit, and then they stop being able to afford employees, and then we start seeing, you know, all these people getting fired and laid off, and unemployment goes up, and then we're just back into a similar situation we're in with inflation going up. I'm selling mine too, which is why I went with the variable. But now, of course, it isn't selling, and I'm stuck with it now. Yeah, see, like I said, man, I feel for you, but trust me, I'm in a very similar situation to you, but not from the mortgaged aspect of it. But we're going to lose a lot of money here, man. I hope you're not too underwater on it, because, like I said, this is going to cost my parents a lot. You know, they're going to see equity value of 6 figures evaporate through this. It's really rough. Have you watched The Big Short? Of course, I've watched The Big Short. We are nothing like the 2008 financial crisis. That is not the market we're in. Actually, I really think if you have money to buy a house, this is your window of opportunity. And the only reason, and like I said, I can say this with like almost absolute fact, what you're going to see happen, especially in Canada. I don't know about the US, but Canada, you're going to see the market cool off until interest rates roll over. As soon as the interest rates stop going up so dramatically, trust me, pinpoint this video, mark my word, the real estate market is going to come back. And it's going to come back, I don't know how aggressively, but we're going to bounce off the lows we're seeing. And I wouldn't be surprised, you know, if we don't go to all-time highs, but anyone that's buying real estate right now and actually like getting a wedge deal or negotiating rates, which no one's been able to do. And we've had so many people come look at my parents' property, and like the low ball offers we're getting are insane. Like people are really throwing in crazy low ball offers. If you can get a house on a good deal right now and you just watch, everyone that wanted to buy a house is now a renter. What happened to the renting market in Ontario specifically? Toronto, 20%. The real estate market for rental units is up 20% year over year. It's crazy. All these real estate owners are trying to kick tenants out to get new tenants in because the market demand has just shoved it so astronomically high. And even though we're landlocked, I think rental locked, I guess, where you can only raise the interest or the rental rates by like 1 or 2%. The government controls how much you can raise rent on tenants. But honestly, if you kick the tenant out, you go back to getting market demand. And if you can get a 20% increase on those tenants, I mean, you're laughing, especially if you've owned a rental unit, you know, a few years ago when you bought it. I mean, you're doing great right now, right? So those people right now that are looking to rent, that want to own, but they're waiting to see what the market's going to do, they're going to flip back around as soon as they feel comfortable. Because why would you want to be paying $3,000-4,000 a month in this inflated rental market when you can buy a house and pay probably the same or less? And again, because even though interest rates are up, that doesn't matter. The housing market is corrected by 20%, especially in the surrounding GTA area, 30% where I live. I've seen homes that were selling for 1.3 million now selling in the 800s. So, I mean, you're basically going to be paying the same monthly payment just on a higher interest rate, because the interest rate goes up, but you're getting an interest rate on 20% less of the overall value of the house. So those people, like, that doesn't change the dynamic of people wanting to buy homes. So just bear with it. And I promise you, when the real estate market turns around, there's going to be some real easy money made for anyone that has the liquidity to buy right now. So, I mean, I'm not worried about the housing market just because we have such a supply and demand problem. It's just a matter of, I don't think any realtor anticipated that every single buyer would just sit on their hands. Like, everyone just decided to stop buying homes. I mean, the volume's dried up by over 50%. Half of all buyers in the market, gone. They just disappeared within a few months. So, I mean, it's not normal by any metric, and it's not nominal. So it's going to have to come back to a baseline eventually, in my humble opinion, I think. I don't have the kind of money to buy real estate. So unfortunately, even though I have $300,000, and yeah, I could go put that into a deposit on a house, then I have zero cash flow. because unless I can find a duplex where I can cash flow half of it, it could be an option. I just wish real estate wasn't so expensive in Canada, because I feel like unless you have $500,000 laying around, it's very hard to comfortably cash flow enough to sustain a crazy ass $3,000 or $4,000 mortgage on an average property that's still selling for $800,000. My friend's buying a house next Friday. She had 4.5 variable rate mortgage a couple weeks ago. That's if she got it last week, I mean, if you got the variable rate, if you're getting it now, I might not be as worried about it, but obviously you want fixed rate mortgages. But the problem is the fixed rate's going to be, a lot higher, probably 6+% on a 20-year, 15-year fixed mortgage. But the 4.5 variable, I think if you're getting it now, I don't think we're going to see interest rates go that much dramatically higher. So, if you're buying now with that, maybe you'll be all right, but you're gambling. A lot of gambling. She got around a 10% discount from asking price. But that's the thing, right? So, I mean, if she can float that mortgage and she's comfortable that if interest goes up another percent over the next quarter, and she can comfortably manage that, I think she could do very well if she bought a house and she managed to get 10% off. I mean, it was crazy that a year ago, man, everyone was just sight unseen. That's how my parents started this whole deal. A guy just came up and wanted to buy their house for an absurd rate. No inspection. Nobody was doing inspections. Everyone was just, because you couldn't compete. If you wanted to come see the house and get an inspection, too bad. This guy's already got money. He wants to buy it. Get out. And now it's like 180. People are desperate. They're begging for buyers right now, which is crazy. So, I don't know. Housing won't crash as the banks own the market. Yeah. And again, the banks, the Canadian banks especially, there's a lot of stress tests that went on to buy. I mean, it's so hard to get a mortgage. As it is. I mean, you have to have 4 times the income of the mortgage. I think it's still 4x the value, right? So if you're making $50,000 a year, you're only going to qualify probably for a $200,000 mortgage, if that. So, I mean, you got to be making real money if you're buying homes in Ontario. But yeah, so outside of the real estate market, man, like I'm very comfortable and I'm very happy to have the portfolio I have, because the cash flow it's been producing has been mitigating a lot of my stresses in life right now. And this vacation I'm taking next week, maybe I'll try and get you guys some photos, some videos. We'll do some live streams while I'm down there. I won't spoil where I'm going just yet, but it is a beautiful place. Not as foreign as I'd like it to be. I'm not going too far across the ocean, but it'll be nice. It'll be nice. I definitely need a break after 2 years. I think we tried to do a meetup, to Vegas a year ago, and we couldn't even do that because of this stupid pandemic. But outside of that, folks, yeah, it's a wild week. So what I'd like most of you guys to do is continue to sit down and just remind yourselves of your current goals and just trying to hustle. Because, the only thing that keeps me alive is my insane frugality. Because at the end of the day, man, I'm willing to sell the shirt off my back. We've been arguing about it lately because I've literally sold almost everything I own. At this point, I don't own a lot, folks. I could literally just backpack my life around, and I'm very happy with the idea of not letting things own me. My car's paid for, no car debt right now, which is just phenomenal in a market like this, especially now that fuel prices are dropping. I mean, $25 puts half a tank in my car yet again, so that feels good. But man, not having those payments and being able to help my family out, which has been detrimenting a lot of my cash flowing into my stock portfolio. I haven't bought a lot, to be honest. I've been avoiding mainly buying stocks just because I wasn't sure exactly what a lawyer was going to cost, which isn't cheap. I mean, usually the lawyer is going to be like $5,000 just to put I guess just a retainer on a lawyer. But just trying to help some people out, other family stuff, donating to other things. I think I've been doing a lot more with family lately, which is another reason that this emergency fund has paid off so well for me. I think because of the pandemic freaked me out a lot and I lost my job, I actually gave myself cushion, and now I can use that cushion to help my family, which has been very prudent and nice. Even though, I was considering my life should be on a much different trajectory right now. It's hard seeing your stock portfolio being down so much this year. I hope it will turn around soon. Yeah, I don't really care. See, that's the thing, right? That's the negative emotion. I'd rather buy my stocks at these prices right now, which I'm going to do. I'm probably going to throw $5,000 at my portfolio in the next week or two, just because I can't not buy in a market like this. It's just ridiculous. I mean, if you're not buying some kind of asset right now, I don't know what you're doing with your life, because this is where you're going to get rich. I promise you right now, if you're buying index funds, if you're buying stocks that don't suck and you're willing to just kind of keep on them, whether that's PayPal, Adobe, Apple, and you're picking them up at these discounted prices, again, discounted is purely perspective based. You're going to come back to me in 3 to 5 years and you're gonna be like, hey, you were right. Things aren't that bad. Because like I said, if you see how negative the market performs in this news cycle, I'm curious to how it's going to perform when the news cycle shifts. and there's no more like crazy negative bad news that people are just, spinning their heads around. Gold will be the first thing to bounce back in the near future. See, this is the 180. If everybody was so smart, the most valued lesson I've learned through this entire interest raising environment, which I don't think we're going to ever see something like this again, likely in my lifetime for a while. I mean, the last time anyone really saw something like this was in maybe the 2008 financial crisis, more or less, probably the 1980s inflation rate. But the crazy thing is with gold selling off, all these, what were supposed to be recession-proof, inflation-proof investments don't stand up against the US dollar. What I never understood is when you raise interest rates, you drive demand to the USD. And that's something that nobody talks about. And it really bothers me a lot because it fights inflation on a whole nother spectrum. I mean, look at international trade. When you look at how much commodities have crashed, copper, lumber, all these things, oil, and all of it's traded off US dollars, foreign, international, and you see the value of the US dollar going up 10, 20% over an entire year. I mean, that is an astronomical increase in purchasing power. So if you're buying, and again, most things again are coming out of other countries. I mean, I don't think you understand like how crazy that is. I mean, you just holding US dollars has gotten you a better return than almost any asset under the sun, except for some utilities. I know like utilities are like one of the few sectors that are hitting like all-time highs. But not gold, not, Peter Schiff, oh, it's all going to come raining down and blah, 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 blah. I've heard so much negative shit and no one's actually pointed me in a direction where they're like, I know this is going to happen because of this. And what I've learned is I know if interest rates go up, the value of the US dollar is going to go up with it. And you could easily make money off that. I mean, I've been making a small fortune off of it because I live in a foreign country to the US. So if you live in the US, you probably aren't buying things internationally. I mean, you're buying US stocks, so you're not seeing the value difference in the currency. But I promise you, if you live in the US, you're getting a lot richer from a purchasing power standpoint. And I see it as a Canadian because I'm holding over 20,000 in US dollars in cash. I mean, coming into this year, because I was so paranoid about taxes and all this shit, my emergency fund is sitting in US dollars, just in a bank account. I haven't even invested it. And every day I'm like looking at it and I'm like running the math on it. And I'm like, since I've just been sitting here this year, I've made like a couple $1,000 just on my US to CAD conversion. And now that if I buy US stocks or use that US dollars, like, man, it's really going to pay off in the suppressed market. So I'm really glad that I really forked over a large amount of capital. I don't sit on any Canadian dollars realistically. I think I have maybe 10,000. 10 or 15,000 CAD. I sit on about 30,000 US just in cash. So I mean that US cash is just crushing it right now, and I want to invest it, man. I've been dying to invest it. I know what the government's going to want from me, so I have some bleed room now, so I can easily throw it into the market whenever I want. But ideally, just because I've been helping my parents and trying to help other people out. With some of my personal family and friends, which is so nice, man. It's the first time I've done that. There's something nice about having enough money to like not only help yourself, but help your family. It really changes a lot of the perspective. But so yeah, I wouldn't buy gold just as much as I wouldn't buy Bitcoin. Honestly, the cryptocurrency stuff is really, it's really jaded me quite a bit, especially from a mining standpoint. I really thought mining would have continued to be profitable, but now that ETH has turned over to proof of stake, a lot of my mining friends, I watch a lot of miners, and they are really complaining right now about the struggle of profitable mining, which it's really detrimental because it's the same thing with gold, right? I mean, you're supposed to buy these assets because they're supposed to be disconnected from market movements, and they're not. All of them trade in tandem with the market, which is very, very painful. So, I mean, if I were to come back around and be in an environment like this, I would be more inclined to stack cash. And I would have really focused more on the US dollar and found some more foreign assets to buy. Or at least if you have US dollars, trying to find a way to hedge that in some foreign investment. I mean, you can open up foreign currency accounts, right? I mean, you could do it. I've been thinking about doing it with European stocks because right now I have US and Canadian dollar accounts, but I really want European accounts. I was thinking about getting Chinese accounts if I could. I don't know if I can without buying depositories, but I thought it'd be so awesome to own yen in actual currency and have it kind of like buying Chinese stocks with yen and keeping it in that currency. I like to travel, and being a Canadian, I mean, you're not usually sticking to Canada. You're all over the place. Canada is a very international place. So you kind of get that idea of, the value of foreign currency. And considering the European dollar right now is trading at tandem with the US dollar, it'd be fun to actually buy Nestle or some of these incredible European stocks, or even European ETFs with an actual dollar, a European dollar. Most people don't do that, but you should. I honestly think it'd probably be one of the best things you can do. If you can figure out how to deal with Forex and become international mind rather than, Western mindset, it's very eye-opening, especially in moments like this, right? Let's read through here real quick. When the US dollar starts falling, will CAD go up against it? Yeah, so look, I'll give you a quick idea here. Let me pull this up just to show you guys. So let's say 1,000 USD to CAD right now. This is what would have happened if you just held US dollars. Here, if you live in Canada, here's your rate of return just from holding US dollars. This is crazy. Like, yeah, it's kind of wild to try and wrap your head around Forex, because you can really only value currencies to currencies. So taking a look, 1,000 US dollars, right? Or 1,000 US dollars is worth 1,326 CAD. In just the last month alone, you would have made 2.71%. In the last year, from the very bottoms, you would have made about 7.6%, right? And basically, because again, the Canadian dollar has global value too, so it doesn't trade a one-for-one in tandem. But even still, like if you were just been cost averaging into USDs and picking up the median here, I mean, you would have easily made a 5 to 10% return just sitting on cash. Now, obviously, on a 5-year basis, the Canadian dollar is volatile as hell. I mean, the Canadian dollar over a 5-year basis does like 15% mood swings. It's kind of wild at how currency it can be that volatile. I mean, everyone's like, oh, you hold currency because it's stable. There's nothing stable about currency. So, I mean, it's kind of insane to think that, if you can wake up to that reality, man, you stop. Volatility really changes the idea of stable assets doesn't exist. I don't think there is such a thing as a stable asset anymore. In Venezuela, fiat paper notes are blocking the gutters. That could happen to the US at some point. I don't think it's coming anytime soon. So there's so much manipulation in precious metal sector. Gold is behaving the way it's supposed to. Debatable. I mean, gold, I always thought gold would perform a lot better than it has, but clearly it hasn't. Hut 8 mining will become a data center. Yeah, that's scary, man. I thought about that, and that's what scares me a lot, because I'm curious to how many miners have to fall off in crypto for it to become sustainable again. Because, if a lot of people are selling their graphics cards and the mining pool becomes smaller and smaller, it should become more profitable. So I'm curious to, how much of the crypto market's going to get wiped out. We're not coming back in the crypto market anytime soon, by the way. I know a lot of people are so bullish on it still, but I still own Bitcoin. I still got my crypto wallet and stuff. I've been trading it, actually. I've been doing very well with trading it. I've been in and out of it like a few times this year, and I've been making good money because it kept selling the jumps and buying some of the bottoms. But I don't look at it anymore as a long-term investment. It just can't be. Because the leverage is unwound. At this point, I think it's a good buying opportunity if you want the diversification, but you are not going to see the gains and the rallies we've seen. Even if you get a spot ETF, so many crypto guys are like, oh, spot ETF, it's going to drive in all this. And no, it's not. It's not, because that's not the purpose of crypto. The purpose of crypto is to be a new financial system for foreign buying of goods and things. Like if you use the Bitcoin Lightning Network, you can go to any country right now and buy things. It's brilliant, but the problem is nobody's using it for that purpose. So, I mean, until some kind of economic circumstance comes into play with like Africa or, some of these other countries that have unstable currencies can find a stable crypto to use, there's no reason for crypto to go to the moon. The only thing that took it to the moon was leverage. And now we've seen $2 trillion wipe out of the crypto market. That's not coming back. There's no, you can't make a spot ETF and just all of a sudden people are like, oh my God, like greatest investment of all time. I'm just going to put money in here for long-term investment. Crypto's not purposed to be a long-term investment. It's purposed as a transactional tool. Just like US dollars. Like, you think stacking cash is a good idea? Cash is king in this market, sure, but cash is only good when you're utilizing it, when there's cash flow, real estate cash flowing, stocks and businesses cash flowing, investing and moving money. That's where the value of currency comes from, not from sitting in a wallet on a crypto exchange where you're like, go to the moon. I mean, until that mindset changes, it's not, it's the same problem I have with the Ethereum, man. Like, Ethereum is still just as useless as it was. It's the third party cryptos that are making Ethereum good. I mean, like Polygon, Matic, because there's still gas fees and it's still too expensive and it's still like shit. And NFTs, have no proven value yet. They're just like, it was all just hype crap. Unfortunately, again, I'm not trying to be too bearish on it because I do like crypto. I love the idea of it. I think it's revolutionary. I think it's going to be huge. The problem right now is it's so speculative. You can't point me in a direction where you're going to make money. Yeah, short-term money and volatile. If you're trading it, it's great. But to sit here and come back to me in 5 years, Ethereum might not even be around in 5 years. I mean, there's so much in the crypto space. If you want to make money in crypto, go watch Alex Becker. The guy's a genius, the smartest crypto guy I've ever seen in my life. And the dude basically has called every crypto move that's happened in the market, which has blown my mind. And he understands where the real value in crypto is, and that's in utility. And the only utility that's going to come up first is gaming. Gaming, when one video game company like Fortnite, Axie Infinity got hacked, so that didn't work out too well for them, but there's still Illuvium, so many awesome crypto games that are going to come out. If those things can penetrate the market, the value of those coins and those NFTs are going to be insane. That's where the real money is going to get made in the beginning. The speculative money has now been made and gone. There's no more speculative money in crypto. The easy money's gone. So now we need to find companies that are going to actually implement it into some real world usable fashion where there's going to be demand. Once we see that demand and whatever that is, boom, we're off to the races again. Domain names like Unstoppable Domains built on Cardano. Yeah, Cardano is another interesting. That's what I'm saying. I think Bitcoin is right now the only true crypto that I would trust because it's the only thing that actually works for like its kind of intended, not really intended purpose. But I only like Bitcoin because it's so proven out, and it's just doing its thing and continues to, and it seems sustainable from like, I don't think Bitcoin's going to zero, but I could see Ethereum, being wiped out. It's a centralized asset. We're moving to this proof of stake network, which is also highly centralized. I think 5 companies control over 60% of the entire Ethereum staking nodes. Because you need like $50,000 in Ethereum. So I think, what is it, like Coinbase? It doesn't take a lot of government regulation to shut down Ethereum anymore, which is kind of sketchy, right? Yeah, it just like I'm not trying to be like to beat up the crypto space, but I mean, you have to be real careful what you're doing there. Super risky. How do you compare the Canadian economy versus the U.S. economy as we enter recession times? I think this is a tough one. I'm more scared. God, this is hard. I love the Canadian economy because it's easier to understand. The Canadian economy is very small and it's been completely driven off of population growth. We are one of the fastest first world growing nations by population because of immigration, because we're a smaller country that's growing. And there's a lot of foreign, we made it easy for foreigners to come in. Most people that want to come to the US, like even Elon Musk did this. He came to Canada and became a Canadian first because it's easier to become a Canadian. And then you become a US citizen from Canada. It's easier to immigrate over. But so from a growth standpoint, I think if you're buying Canadian stocks, you're never going to go wrong. I think it's easier to pick Canadian companies because there's just not as many of them and they're not as big and as saturated. So, I mean, we have monopolies in Canada. Canada is completely ruled by monopolies. There's about 3 to 5 major companies in every sector. Telecom, you got Bell, you got Rogers, you got TELUS. The banking sector, you've got Royal Bank, you've got Toronto Dominion Bank, Canadian Imperial Bank, Bank of Nova Scotia. That's about it. I mean, some other small ones, National Bank of Canada, BMO. That's how it is in every sector of the Canadian economy. So it's so recession proof because, as people continue to immigrate over, and they're always going to immigrate over. I mean, that's why we have a real estate problem because, we just don't have anywhere else to build real estate. It's a whole nother story in itself. Greenbelt rules, all this bullshit in construction, policy and just red tape. But still, all these people come in and who are they going to pick for a phone provider? I mean, I'm basically with Rogers. Who are you going to pick? You only have 3 options. So, I mean, you're not going to lose money buying Canadian stocks over the long term because our population will continue to grow at a great rate for the foreseeable future. For as long as I can see it, Canada's going to continue to grow. And you're not going to lose money in these stocks because they're too foundational and they're too monopolistic. In the US, I mean, there's so many companies in every sector for everything that are at equal scale almost, right? I mean, look at even our REITs, our real estate investment trusts are basically monopolies at this point. They're not going anywhere. There's nothing that's going to disrupt them because you can't build any more real estate in Toronto. We're done. In the US, like there's just like I said, what are you going to do? There's so many banks. There's just so much at play and they're so big and they're so globalized. I mean, most companies in the US are insanely global. I mean, you look at Apple. I mean, Apple, the GDP it creates or the money it makes is the size of a lot of countries' GDPs, for crying out loud. How do you know what the phone market looks like on a global scale? You don't. So, I mean, when you're buying Apple, you're just buying it because it's a great company. You're not buying it because you understand the global metrics of iPhones. I mean, you know how many people year over year think iPhones are done growing and people are done buying them and we've saturated the market. And every year Apple's like, no, we're not. People are still buying new iPhones, more adoption. We own like 80% of the phone market in the US. We're going to globalize it and own the markets over here because we're going to take your used phones, buy them off you at a cheap rate and then sell them at a premium in these foreign markets, but it's cheap to them. So they'll buy them. It's crazy. Like Apple's just, it's so hard. So when it comes to the US economy, I think the US economy is going to be stronger than the Canadian economy because of globalization. And again, you look at the interest raising environment, you know, Canada raises its interest rates and we don't see the Canadian dollar explode. We're not seeing like the Canadian dollar all of a sudden compete on a global basis. And all of a sudden the Canadian dollar is rallying and getting at par with the US dollar because no one cares about, you know, Canadian business and the Canadian dollar. No one's stacking Canadian bonds and GICs, right? They're stacking US bonds and US investment certificates and US dollars. And, you know, oil is globally traded on US dollars. So I like the Western world. I think the Western world is the safest place to invest money. But in a recession, it's so hard to tell like who's going to survive and who's not. But in Canada, it's easy. You know, I don't think Apple's going to go anywhere in a recession. I mean, obviously, but there's so many companies in the US. I mean, Canada's, you know, our TSX is only made up of 60 companies. You know, the S&P TSX is 60. In the US, it's 500. It's a lot easier to understand an economy of 60 major companies than an economy of 500 major companies. So, I mean, it's really hard. That's why I like the banks, man. You buy the banks. You're not going to lose money. Yeah, they might go down, but I mean, I've talked to guys that have been around for so long that retired on the Canadian banks, and like the way they talk about them is funny. Yeah, I mean, Fortis, all these Canadian, you know, utilities, TELUS, they're great companies, Enbridge, phenomenal stuff, right? And it's easy. That's it. That's like you just named literally most of the major companies in Canada. Fortis is like the largest utility next to Brookfield Assets. I mean, TELUS, Enbridge, the largest pipeline company in North, like you're not going to lose money there. Yeah, you might be overpaying for it. Yeah, the growth rates on those companies, especially with Enbridge, I can't be seeing, well, they're still growing pretty good, but you know, they're good. They're just good. I don't want to say they're like the growth rates aren't going to be like less than the US growth rates, but historically Canada's, you know, companies, they're not growing at the same rate because we don't have as much foreign investment or globalization. You know, like Fortis and Enbridge, I can't grow on a global scale, but you know, their businesses aren't going to go anywhere. And, you know, they're highly entrenched in these economies. So, I mean, they're great companies for dividends. Would you consider Telecom Canadian stock as a safe play right now compared to other growth stocks? Yeah. I mean, they're outperforming, aren't they? I mean, you look at TELUS. Again, it depends on what you want. Are you looking for stabilized income? Are you looking for growth? Because that's going to change the depends. I mean, TELUS is only down 3% this year. Bell, which also trades on the U.S. markets, which is nice. Bell's down 9%, so Bell's hit a little harder. What about Rogers? Yeah, they've contracted a little bit, but they're technically with the dividend. I mean, they're dramatically outperforming the U.S. market. I mean, Rogers is only down 7%. So I mean, you look at TELUS, you slap on a 4% dividend yield, and you're not even down this year. I mean, you're flat. So yeah, I don't, like I said, they're good companies. I'd rather own them through ETFs right now, personally, for me. But I think if you built a portfolio of like 5 or 6 really great Canadian companies, they'll cash flow you into retirement. In fact, there's a channel I should share. I talked to these people. They're older Canadians that retired. They sold their house. So the way they went into retirement was cash flowing their investments and paying rent in a condo, so they wouldn't have to deal with maintenance. And now they're just traveling and living it up. And they bought Bell. They talk about a lot of the individual stocks they bought for their retirement cash flow, which is awesome. The scariest news I've seen in the past few days is that Apple is now considered the most shortest stock right now. There's no way. There's no way. I highly doubt it. Let me tell you how many people are shorting Apple. Let's see what the short float on Apple is right now. I think, again, that might be over dramatized because you can see the short floats on, actually, I'll just show you on, I'll do this as a little learning lesson before I bugger off here. You can see like usually how much of a stock is shorted in the float of shares outstanding. Just in Yahoo Finance. If you come into Yahoo, you look up Apple, you go into statistics, you scroll down into some of the statistics here, and you can kind of see the short ratio, short percentage of float. And I mean, there's only a 0.7% of Apple's entire float that's shorted right now. So Apple is not going to short squeeze. I think Facebook might probably be one of the more shorted companies. if a lot of people haven't recovered already. But take a look, because yeah, Facebook, I mean, even the short float on Facebook's only 1.1%. And that's pretty much double how many people are shorting Apple. But what's a really big shorted company, you think? If the smaller cap the company, usually the higher the shortage float is. I mean, that was the whole thing with GME, right? Because GME was such a small cap company. So many people, I mean, like, look at Netflix. It's 2.1% of the entire float is short. And this is only as of August 31st. So these haven't even updated in the last month. So yeah, maybe there's more people shorting Apple. We just can't see the full shorts, but no one's shorting Apple. It's the stupidest thing you'll ever do. If there's one way to lose money, it's shorting Apple. It's like company does share buybacks. Like you're just fighting an uphill battle. I mean, you got Warren Buffett buying it. Every time it dips, some big hedge funds buying it. You're going to lose money shorting Apple. So I'd be cautious there. When Tesla is 200, I'll buy. I can't buy Tesla anymore, man. I love Tesla so much, but it's a hard one to wrap your head around, because you can get psyched into it, but I think that was a stock where if you bought it post 2020, like 2019 era, 2018 era, you did very well. But it's hard to see where it goes in the next 3 to 5 years. Like I keep saying, Tesla's a 2030 play. I think come 2030, Tesla might be competing for the largest market cap. It already really is, but I don't think it deserves to be where it is today. But I think give it 5-10 years from now, and that's when Tesla's current value will start coming into play. And that's when we'll start seeing the exponential growth rates of this vertically integrated business. Everything from, you guys know Tesla. I don't have to give you the Tesla bull case, but I think it takes time for those insurance businesses and just, actually building up a taxi network. All that stuff's going to take a lot of time. And the stock is priced in a lot of it. But again, you can't value Tesla like a normal value stock. Value doesn't exist in this market. So Tesla could stay where it is. It could go higher, but it's purely based off hype. I don't think it's based off value metrics. Can you clarify why you think healthcare is risky? It depends on what healthcare you're buying. I don't think Johnson & Johnson is risky, but I think the companies that are largely going to make up a huge return in the future are going to be companies you don't even know exist right now. And do you know the companies that are working on doing organ transplant and DNA modifying with pig organs? I mean, do you know the companies that are on the forefront of curing all kinds of cancers and soft tissue sarcomas? I mean, do you know any of these companies? I mean, you might know MindMed and these psychedelic companies, I think, are going to be astronomically huge companies in the future. They'll probably get bought out. I think they're going to get bought out probably in the next couple of years. I wouldn't be surprised. But the thing is it's so hard to recognize the companies that are going to make the real difference, and then having the intuitiveness and understanding of those sectors to actually have the balls to make the bet on it and then actually see it through over the next 5 or 10 years, because biotech doesn't do anything until they actually prove out the trials, right? And in the meantime, they're just cash burn. All these trial companies just burn money. They just keep diluting you as a shareholder until they can prove out what they're trying to, their technologies. So, I mean, genomic editing, if you're going to buy healthcare, if there's one stock I would pick that I think would be the best, Google. I think Google's going to have a huge play, and it's going to see a lot of its hands in many different aspects of the healthcare markets because of genomic editing and genomic sequencing. I think that plays a huge part in cancer treatments, doing these organ transplants. So Google's going to have a nice, Google and Apple, you notice that these companies really want to be involved in the healthcare space. I mean, Google. So the only reason I love Google so much outside of, their great business is their management is trying to tackle trillion-dollar market problems. There's a guy that worked for Google, and they found a way to save, I think, Google like $50 million a year, and they scrapped the entire project because Google doesn't care about saving $50 or $100 million a year. They care about finding something that's going to be a multi-trillion-dollar industry. That's how they think. I mean, self-driving. I mean, they're involved in the whole auto industry. They're involved in the whole healthcare industry in the most significant way imaginable. You think building EVs is the profitable business? You think Tesla would be where it is if it was purely building EVs? Hell no. The real money is in the software, right? And in all that extra stuff that has crazy high margins. So Google's playing in the right sectors. So, if Google gets into self-driving and they start licensing that next to Tesla, and they're the only other major competitor, there's only going to be like 3 self-driving companies, and that's it. They're going to dominate. And if those companies are Tesla, Google, and God knows maybe GM or something else, those companies are going to make real money. Like, it's going to be insane, right? So if I was going to be looking for companies in the healthcare space, I'd be looking for companies that are going to tackle probably the most broad reaching and have the technology where you have to use it. You don't have a choice. I mean, if you looked at Google's AI stuff, it's insane. We've been playing around. We actually got access to their that software where you can just type in whatever you want and it brings up images. Unbelievable stuff. Google is coming into the buys. I think Google's a buy now. Anything below $1.20, if you're young. So here's the thing, right? How do you value a stock? Well, how old are you? Because you could buy Tesla today if you're 20 years old. Everybody under the sun's going to tell you it's too expensive. But now all of a sudden 10 years goes by, you're 30 years old. And that investment you made in Tesla when you were 19 or 20, like you have another 30 years still before you're retiring, and you still have all that time for Tesla to continue to build up that value. So I don't think if you're young, you should even care about the value of these stocks. I think that's another ignorant thing that old value investors will tell you. Everything money, I got a chip on my shoulder with those guys because the way, I hate value investing. I'm so done with the whole idea of trying to find value in stocks. I've never bought a stock and made a crazy amount of money on it because it was a value stock. Have you? I mean, are you Warren Buffett? Because I made most of my money off Tesla, Canopy Growth Corp, MindMed, like companies that just like when you looked at them, you're like, there's no way to value this. It's just, you kind of have to look at the economy and where the economy is going with those sectors and just try and make the right decisions and pray to God that, if you see the sector falling off, you get out of it. So, I mean, what am I doing? Just get my last message. Anyways, people are texting me. I'm going to have to get out of here in a sec. But please, if you are like below 30 years old, the only thing you need to do is buy these dips. Don't get caught up in the fear cycle and just sell your bed. I've done that. I sell everything you have. I've sold my Yeezys. I own no luxuries in my life except the laptop and things that are highly efficient to make my life a little better and coordinate me in a way that just, doesn't cost me my time, but helps me out. And then also gives me some time with my family. But man, I just don't think people understand that if you're in your 20s, you do not have to look at stocks the same way a 30 or a 40-year-old with $10 million in the bank does. If you're 20 years old with 10, 20, 50 grand, buy every dollar you can, drain your account to as little as possible, presuming you don't have a kid, you don't have a family, you don't need as big of an emergency fund, and you're able to hustle and go work 2 or 3 jobs for the next 10 years. That's what I did. I mean, that's all I've done for the last several years. And here's my account. Yeah, I'm not a millionaire. I'm not Graham Stephan here, but in 7 years to see my portfolio, a guy making $40,000 a year on average for the last 10 years is able to build up a 400K portfolio. I mean, anybody should be able to do it. It's not like it's hard. It's just consistency and being frugal and keeping those mannerisms and knowing that, if you're buying assets today, you have 20 or 30 years to let values catch up, even if they're too expensive. And eventually they'll catch up. And if they're good companies and you think Tesla's a good company, in 2030, it could have another exponential growth rate. It could be a $5 or $10 trillion company for all we know. Thanks so much for taking the time to answer for questions. Big fan here, brother. Fellow Canadian, and learn from your channel. Keep it up. So I do appreciate this. And like I said, I really appreciate you guys kind of dealing with some of my sponsored content recently. I've been mainly just posting like a few videos and some sponsored stuff just to keep myself afloat. But I'm hoping that, after my vacation, I'm going to try and make a really consistent plan to try and keep doing weekly live streams until the market recovers at least. And just make sure you guys are kind of, in the same, if you're in the same mindset, I want to connect, man. I want to, find ways to just kind of keep us all hustling together, because if it wasn't for YouTube and this stuff, I don't know where I'd be. YouTube and these people didn't exist when I started investing. And I listened to Peter Schiff. I put all my money in gold. The first video I ever posted on my channel was me selling $20,000 of my gold. Like 80% of my portfolio was precious metals before I had this wonderful awakening of, holy shit, like, why am I listening to these idiots? And, Graham Stephan and Jeremy and all these people barely started their YouTube channels. So you guys get the luxury of, just being able to connect. But I love that. And I want to continue that until we all get to where we want to be in life, because it's not an easy journey, man. It's a very windy, messy journey. So on that note, I do appreciate you guys, and I'll come back and we'll do some more live streams and we can talk about some of these stocks. But stay cool, stay awesome. And as always, I look forward to catching you in the next one.